What does a liquidation analysis look like? You just simply on a spreadsheet list in one column the assets: cash, accounts receivable, inventory, prepaid expenses, equipment, real estate if there is some. And then you list the relevant creditors in order of priority. And if the bank is going to take a haircut, then it's only the bank that matters. It's the priority claims, being in Canada, CRA, withholdings, and then the bank. And that's pretty much it. And you take off first from the gross assets, you would take off the costs of the receivership, being probably 10% or somewhere in that range is a good estimate. So you take your receivable, your cash, obviously 100 cents on the dollar. You apply a margin to every asset. Receivables, maybe 80%, maybe 60%, depends on the industry. Inventory, you're probably going to get very, very little, depending on the industry. In a pure auction blowout, you would think maybe 20 cents on the dollar in some cases. Your equipment could be equal to book value. It could be way less than book value. In some cases, it could be more than book value, right? So you need to have an understanding of equipment in the market. Now, we did one in automotive this week, and in the automotive sector, there's not a lot of secondary market for used automotive manufacturing equipment, and so you end up with a pretty low number. And then you, like I said, you take off the fees and you deduct that. You end up with your net assets at liquidation value, and say they're $1 million and the bank's owed $2 million. Well, the bank's going to